In uncertain times, investors seek assets that protect wealth from inflation and economic turmoil. Gold has long been the classic store of value, rare, tangible, and trusted for millennia. But now, Bitcoin, a digital asset with built-in scarcity, challenges gold's dominance. The last decade, marked by economic shocks and shifting markets, has tested both assets. Investors have faced a choice: the stability of gold or the explosive potential of Bitcoin. This isn't just about returns, it's about what we trust as money. As we compare their performance and roles, we uncover what truly preserves wealth across generations. The stage is set for a showdown between the ancient and the digital. Gold's value is rooted in its physical properties: durable, beautiful, and scarce. All the gold ever mined fits in a small cube, and no one can create more at will. For centuries, it's been a universal symbol of wealth and security. Bitcoin, by contrast, is pure code, decentralized, borderless, and limited to 21 million coins. Its scarcity is enforced by math, not mining. Gold's supply grows slowly. Bitcoin's is perfectly predictable, halving every 4 years. Gold is tangible but hard to move. Bitcoin is weightless, instantly transferable worldwide. Gold's value comes from history and touch. Bitcoin's from its network and digital trust. Both are scarce, but only one is programmable. The world now has two radically different ways to store value. Over the past decade, gold has been the tortoise: steady, reliable, and slow to change. In 2016, gold was about $1,100 an ounce. Today, it's around $2,300, a solid hedge against inflation. Bitcoin, the hare, started at $430 and soared to $120,000, but with wild swings and gut-wrenching crashes. A $10,000 investment in gold doubled. In Bitcoin, it became over $2.7 million, if you could stomach the ride. Gold offered peace of mind. Bitcoin, life-changing gains and sleepless nights. Gold is the portfolio's shield, defensive and stable. Bitcoin is the sword, aggressive, risky, and transformative. The choice depends on your risk tolerance and vision for the future. Both assets have proven their worth, but in very different ways. Gold is for preservation. Bitcoin is for growth. The past decade shows they can coexist, each serving a unique purpose. The tortoise and the hare both finished the race, just on different tracks. Which path would you choose? Gold is the classic safe haven. Investors flock to it in crises, trusting its enduring value. It's a defensive asset, unlinked to governments or companies, and shines brightest in turmoil. Bitcoin's role is evolving. Once seen as a gamble, it's now called digital gold by some. Its fixed supply and independence attract those wary of inflation and currency debasement. But Bitcoin's behavior in crises is mixed, sometimes rising, sometimes crashing with risk assets. Gold is risk-off. Bitcoin is still mostly risk-on. Gold's job is defense. Bitcoin's is offense and growth. The digital gold narrative is powerful, but Bitcoin isn't yet a true crisis hedge. For now, they play different roles in the investor's mind. The future may see these roles shift as Bitcoin matures. Buying gold means dealing with physical reality: coins, bars, vaults, and security concerns. Gold ETFs offer convenience, but you don't actually hold the metal. Bitcoin is digital. Buy it online, store it in a digital wallet, and transfer it globally in minutes. Gold is hard to use for daily spending. Bitcoin is divisible and borderless, though not yet mainstream for payments. Gold's strength is its tangibility, but it's heavy and costly to move. Bitcoin's strength is its portability, but it demands digital literacy and careful security. Lose your gold, and you might recover it. Lose your Bitcoin keys, and it's gone forever. Both assets have become more accessible, with better storage and user-friendly platforms. The choice comes down to trust, physical permanence, or digital innovation. Each has trade-offs, but both are now easier to own than ever before. The last decade taught us that risk and reward go hand in hand. Gold stabilized portfolios. Bitcoin delivered explosive, volatile growth. They're not rivals, but complements. Old and new, defense and offense. Gold's story is written. Bitcoin's is still unfolding, driven by adoption and innovation. Gold remains the crisis hedge. Bitcoin is a hedge against currency debasement, not yet against panic. Wise investors didn't pick just one. They diversified, using gold as a foundation and Bitcoin as a speculative bet. The real lesson? In a changing world, resilience comes from blending tradition with innovation. Gold preserves, Bitcoin transforms. The future belongs to those who understand both. The showdown isn't over, it's just getting started.